And now to our first conversation, we see the real estate market in 2026 is, navigating through a post-pandemic recovery, shifting work and living patterns, elevated inflation, and evolving investor behavior. With new financial models and technologies influencing, property demand, investors and home buyers are strategizing around long-term value and rental income and tax implications. Joining me to unpack this is Mr. Benga Ismail. He's a partner at Ismail and Partners Estate Surveyors and Valuers, joining me via Zoom. Great to have you on the show. Good morning.
Good morning. Can you hear me?
Yes, I can hear you, sir.
Thank you very much.
So let's try and unpack what's to expect for Nigeria's real estate market, in 2026. We're still seeing the housing deficit. That's 22 to 28 million homes. That's a big number. I'm looking at Nigeria's housing deficit. There's obviously high interest rates there, between 18 to 27%. That's resulting in fewer buyers and stronger rental demand at this point. So break it down to me. What have you seen so far? I know you operate in this industry. What have you seen so far in 2025? And what are the trends you've noticed?
Thank you very much. Obviously, the biggest headline in 2025 were the screaming rents, the screaming figures that everyone is seeing. From January 2025 to December, everything was about high rates, 100%, 150 rental reviews. Also, you saw capital prices also going north. And that, for me, was the headline for 2025 in the real estate market. Where did these prices come from? What happened? What are we dealing with, and what's going to happen? And this coming to 2026, the big first question is that, will this continue? Will this price increase continue? And we must look behind the curtain. Why did this happen? The last time anything like this occurred was sometimes 2007, 2008, where we saw prices galloping in this sort of direction. So the trend you ask to answer that question simply is, what exactly is driving this market?
So, definitely looking at the rise, the price rises in 2025, what are you projecting could be the percentage growth in, property prices in 2026? Do you see the same trend from 2025 coming into 2026?
Look, I don't think it's sustainable. It's definitely not sustainable in the direction it was going. But when you look back as one may have costed, obviously we look at the FX market, capital construction cost readjustments, inflation, and all of those things. Those are the things that were definitely behind the readjustments. Now, usually we see prices because income has increased, mortgage credit has improved, but none of these things happened. Yet prices went up, and if prices were going up, income wasn't increasing, then where is affordability coming from? The issue simply is demand. Demand is outpacing supply. So we have that issue going on there. In 2026, will this happen? I don't think the price growth will slow down, definitely, because there's no way you put the prices at the level they're going and demand will keep happening. People will move to emerging locations, which we're already seeing. So I think there will be a readjustment in prices. There'll be stagnation. There'll be stagnant.
All right, Mr. Ismail. So sorry, I had to butt in there. Information for our DSTV viewers: we'll be joining live coverage for the Zamfara State Government commissioning various projects in Zamfara local government area. You can watch that. That's for our DSTV subscribers. You can keep following the money right here and all other platforms. Thank you so much, Mr. Ismail, there for helping us break down what's to expect in Nigeria's real estate market. But, looking at 2025, that was the year we had stable, the Naira was stable. We even had a strengthening, of the naira. Inflation, according to MBS data, that tended downward in 2025. Couldn't that play into, lower prices in the real estate market, in 2026, or are they not enough?
It's still not enough. It is because you see, the structural situation is simply that we do not have enough houses to meet the demand. But then you still have to build the stock. You have to build the stock. Inflation is still not at a level that makes construction costs level up. So the construction cost will still be high. Interest is still at 28%, you said. So opportunity cost of using the funds to even build these houses are still a factor. So we are not yet at the point where we will see the prices equal affordability. We're not yet at that point. So we're at a stable point. FX is stabilizing. Interest rates is coming down in bits. And then inflation, which is the most important aspect, is gradually coming down. So we hope construction costs will then stable and go back south. But it's still going to be another 12 months before we get into the place we want to. But then demand is still going to be pushing stuff up. And prices, I still believe, will go up, but not in the same manner it went up in 2025. But in 2026, slight growth, slight price increases, but not much. Now, the thing I want to say is that this is not value. A lot of people will see real estate as valuable because prices were going up. Prices were increasing, value was not increasing.
So if prices are increasing, but value is not going up, how does that work really?
Because you see, it's about yield, cost, and returns. So your post yield after tax position doesn't technically give you a better position. That's why a lot of people are putting money in the treasury bills when treasury bills were about 18, 19, 20%, because your return on your treasury bill yield was higher than your net return on your real estate investment.
All right, so definitely there's always that saying there that the real estate markets, that's the best hedge against inflation. Is that still the case at this point?
Of course, it is definitely the case. It's definitely clear over time. When you're taking a beating on your currency position, it hits you immediately. But a lot of people will run into real estate investment as a defense, because over time you come out of it. And research has shown that I think it's between 6 to 7 years, or let's say 5 to 7 years, your real estate investment starts paying you off. It turns out better when you look at what you put in it. But in the very short run, it really doesn't give you that return. But it is still the best defense for your wealth.
Right, I can imagine. I can imagine some of those metals investors there seeing the way gold has, performed from 2025, into 2026.
Yes, so that's another phenomenon that's happened. People have run away from cash and put their money into gold, running away from dollar, putting their money into gold. So really, that's where it is.
Right. So looking at, the cities and regions in Nigeria, which would you say are expected to, outperform others in the 2026 property price growth?
You want me to start quoting stuff here? I don't want people running to locations and coming back and saying, what emerging markets, they're all opening up. Ibadan is opening up. The Ogun State corridor of Abeokuta, Shagamu, and they're all opening up. In fact, I've seen some investors going to Asaba, the Delta State. All of these places, Ekpe corridor is right now booming. Badagry is going to open up. A lot of this is driven on the back of infrastructure, and people should watch where infrastructure is going. Follow that and go before it gets there. The minute government speaks about opening up a place, go there. Lagos is getting tight. the prime location of Lagos, we all know, is getting tight. So we can't all be in the center. So you look outwards. Anywhere infrastructure is building up to, where title is safe, where it's secure, and you have access to documents that protect your investments, those are where emerging possibility. Usually it takes 7 years, 8 years, but secure your position, make sure it's watertight, and make sure it's land. When I mean land, make sure it's something you can actually see.
So, looking at some of the trends there, with the whole Dirty December, celebrations and all of that, definitely we've seen the shortlets segment. That's been getting a lot of attention, so far. And I hear there's a trend now with most long-term rental landlords now looking at, saying, you know what, I want to furnish this property and put it out there in the shortlet market, even though maybe that property is in a corridor or somewhere. Is that the right? Is that the right strategy?
I see you chuckled yourself. So look, everyone will run into shortlet now because they can see they're hearing figures that they don't understand. But I tell you this, like I said, 2007, 2008 is when we saw this thing last, and that time I also went into shortlets. But I immediately got out of it. Seeing shortlet is great. You get people paying you cash on a day by day, month by month. But it has its own issues. It has its own long-term, issues, management issues, void problems, instability, because if you don't own your buildings, you're confronted with the fact that rents can also go up on you as an operator. So you wouldn't even know where these things happen. So it's a very, very, in the same way it is short-lived, but short-term, if not well positioned. It doesn't have the stability of long-term rental investment, but in the short run, it can help you. So whoever is going to go into it should have maybe a two-year plan. And when you look at it, invariably, is Dirty December the only driver for this? If it is, then really doesn't make sense. But the fundamentals of the location, like Lagos Central, a lot of the shortlets we see, it's always in the center, the city center. So if you're in Lagos, usually Lekki, Ikoyi, VI, or on the mainland, Ikeja, GRA, and its environment. So I don't think it could do anyone that is going to buy a block of flats or invest in a block of flats will get the same yield. So you don't think about that. All right. So anywhere, if you go in a city, any of the states, if you go to Enugu, again, you look at the center of the state, the capital city. So technically, those are where you will get the returns. But short-let, it's not easy to go into that investment. Don't go into it if you don't have the courage and stamina to deal with the issues that come with it.
Right, and talking about the issues with short-let apartments, looking at the amount of money some investors there make daily or monthly, does it outweigh the issues?
No, I don't think it doesn't outweigh the issues, because at the end of the day, you need to control the issues. For instance, I know some clients who invested, bought furniture, put it in their apartment, were expecting that they would have a good turnout in December. But unfortunately, they didn't. This wasn't rented in December. So you have furnished, that's a huge capital expenditure. You have power, you have generators, power energy services that are going on at the same time. You have staff you have to maintain in that period. So all of this, when you look at the yield over that investment, it's a negative return over time. So those issues are only positive when you stay the long run. So you might have invested in March, ready for December. But then there's April, May, June, July. You must have taken in that period. So what people usually do is they reduce their rates in April, the low season as I call it. And then when it comes to December, which is why people don't understand that the prices of December were outrageous, because they have to average out. So when it comes to December, when the highest demand is, you make your money back in that period. So for those who don't make the money back in that period, total negative yield, the red lights.
All right, let's look at the new tax laws. Definitely, that's on the minds of many Nigerians at this point. And I'm wondering if we're seeing any disruption with the new tax laws, when it comes to real estate transactions. One I've heard about is with the withholding tax in Lagos State, that's from the LIRS, and the tenant is a collection agent for the LIRS at this point. So if you're paying your rent, you're supposed to deduct the withholding tax, from that. And I'm wondering, is it that straightforward? Is it that simple?
Things. Withholding tax is not new. It's not new at all. It's something that have been always been there. I think the only issue is now pronounced. It's the government is now saying that it needs to be collected, it needs to be identified, and it needs to be paid. So it has always been there. It's not a new tax. So the 10%, it's only an advanced tax. The withholding tax is an advanced tax. It's a tax of the income you're receiving as either an investor in real estate. So it's not new. VAT is not been applied, and I think the only other one that has always technically also been there is the capital gains. Those are the three applicable tax in this new reform. And it's not a reform, but for real estate, these taxes have always been there.
All right, so definitely, I guess we're not seeing any disruption for real estate transactions with the new tax laws. I guess these taxes have been there before. So
yes, enforcement is what I think will improve. Enforcement is what I think will improve. Not that they are just being introduced and will cause a disruption that we understand.
All right, so looking at 2026, I'm guessing there are still investors out there trying to figure out, how to own that property that they've been dreaming about for the longest time. Are you seeing improvements on the horizon? When it comes to mortgages in Nigeria, that segment, are you seeing any improvement coming?
I am not saying, to be direct and factual, I'm not seeing improvements. I mean, we have mortgage companies, but I think the penetration rate is still below 5% at the current moment, and I don't see what will change this. The MRIF that has been introduced, one of the latest attempts to make sure this sector of the market changes. And I sincerely hope, with what I have read seen about MRIF, that it provides the right platform and improves from this 5% penetration to at least 20%. If we can get that. And there's been, the MRIF is the latest one. The mortgage refinance company was another attempt that was done. And all these different attempts are aimed and geared to improve the mortgage availability, but it really hasn't done much. And if we're measuring, we should be looking at penetration rates of the mortgage availability. And like I said, the fundamentals that need to change are improved income levels and available mortgage credit so that people can buy more homes in the market. So to answer your question, I honestly do not see immediately, but the attempts are being made at the moment.
All right, definitely. We'll keep watching your space, and I'm also wondering how, some tenants there are looking for property right now. Definitely, you've mentioned that there's not enough supply at this point, but the demand, keeps outpacing supply of houses. I guess still early days. We'll see how everyone's able to navigate this market in 2026. Thank you so much. Mr. Benga Ismail is a principal partner, Ismail and Partners Estate Surveyors and Valuers. Thank you for coming on the show today, sir.
Thank you very much.